All right. Today we're going to be discussing the concept of support and resistance. It is super simple, so it's going to be explained in less than 10 minutes. To start with, support and resistance is essentially an area where price has historically been found to inflect, meaning that whenever price goes down into it, it's an area where it finds support and goes higher. Likewise, when price goes into it from below, it finds resistance and goes lower. All right. So on the SPX chart over here, we have a really good example, two really good examples actually. Let's start off with this SR zone over here, marked out with this rectangle, the orange one. You can see below it, it was resistance on the 4-hour. Then, when it was above, every single time it dipped back below into it, it found support and ripped back higher. It didn't do it over here, but the next time it did it right over here, it went higher. Next time it did it over here, went higher again, even higher, and then didn't quite touch it again, and now it's at the highest point in the range that it's been since it broke down. Likewise over here in the opposite sense, this is resistance. So price went into here, broke down, went back, broke down, went back in, broke down, tried another time, failed hard, and then went all the way back down to the lower support resistance area at 65.55 basically, 65.53 to be exact. So support and resistance, and whether it is support or resistance, because they are the same zones, is determined by where the price is relative to it, right? Below this zone right now, when price is below this zone, this area is resistance. When price is above this zone, this area is support. Now, a flip occurs when price breaks out into one level or another, okay? When price goes above here, this now should turn into support. Likewise, when price breaks down below here, this price should now act as resistance whenever it is retested. And that basically summarizes the concept of the support and resistance flip. You have established support and resistance, and that eventually gets broken through, and the next time it is tapped into again, aka the retest, it flips what it used to be. Okay, so what used to be resistance that got broken through is now support. What used to be support that got broken through into the downside is now resistance when it tried to be tapped into from below. We're going to go through some more examples over here. So this is USAR. Now it has not done the complete flip yet, but what you can see is that we have a very clear support and resistance zone. Started over here, and then every single time it tapped into it, over here, over here, over here with a consolidation below, squeezed with the EMAs and then broke through on a high volume push up. This is an example of resistance breaking. Now, technically speaking, what you would want to see is the resistance turn into support the next time price goes back down into here. Okay, let's go into HIMS. HIMS has a really nice chart that you can see support and resistance very clearly. Let's go into the weekly first to make a lot cleaner looking. So on the weekly, you have this all-time high over here, marked it out. Then you have the retouch over here, failed to break through. Then you have again another pretty high wick above, but failed to close above. Broke through finally, and then what happened? Next time it came back down, it turned what used to be resistance into support, and it climbed even higher. And then after the whole tariff fiasco with Liberation Day, where did price find its floor? Again, at the former all-time high, the same level where it bounced the last time. So that tells us that what used to be the ceiling is now our floor. This is a valid support resistance flip. Now, over here, you can see, again, we have this area of resistance, right? So every time price tapped into here, it failed to break out. Here, 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 and here. Keep in mind this is the weekly. If we zoom in on the daily, you'll see in even more detail how it failed to break out. And you'll also notice that the all-time high is over here and it never got tapped into. And that is why it is not the main focus support resistance zone. It really is right over here. So this might not be the all-time high, the biggest swing point, but it is the most relevant because we see the price structure, the market structure, tapping into it repeatedly enough to make it so that we can be pretty sure that a break above this is going to be the valid move. It's probably going to be something very similar to over here, how it broke through, set a new high, and then broke just slightly below, and then higher, right? So you could expect something maybe like so, if it did break through. But anyways, likewise over here, we have support. So this area is an area of high volume. You can see over here, price tapped in, support, tapped in over here again, it broke through, turned it into support, it was resistance briefly, tapped in again, support, support, right? So the creation of support and resistance also forms ranges, and you can see a very clear range right here. Price has not shifted or gone through this area from $42 basically until $66. Price has not gone through here and closed at a higher value over here since basically February. So this is a very nice range, and you can trade this. You can go long over here at the bottom of the range, and you can sell and then flip short over here at the top of the range. Whoops. And then likewise, you can also play the break of the range, meaning that once you get a break out, you trade the SR flip model, which is that you expect the retest to occur, you want a close above this level or into this level, and then you go long expecting for a bounce to occur and create that SR flip. So there's two ways that you can trade support and resistance. Now here's another example, KWeb. So with KWeb, going on the weekly would be much better, but you can see clear support and resistance first with that big zone over here, and then with this swing high just before the real continued breakdown, and then the distribution accumulation range that got formed over here. Now it broke out above, retested, this is the SR flip, and we can expect price to go higher into the next SR zone, which is at $47.66, $48 or so. Likewise, again with SKYT, it's a very similar chart with not as much price history, but you have clear support here, support here. Support got flipped into resistance. It failed to hold as support, and what was now your friend is now your enemy. So you have price failing to break out above here, holding, distributing, finally broke through conclusively for a few weeks with some pretty solid closes firmly above this level, which is what distinguishes it from here, because you can see it kind of chopped into here even after it did break through, and now went way back down into here, closed into it, and now we're hoping for a flip and for SKYT to move higher towards $21 and above into the 30s. Oscar is our final example. So you have a very clear support resistance level. Right over here is support, support failed, and now again your friend is your enemy. So now the next time it got tapped into here, it was not a nice little price floor for you to move higher and higher and go to the moon. No, it pushed price down consistently. So 1 time, 2 times, 3 times, 4 times, and keep in mind this is the weekly, so this could be dozens to even hundreds of times that price tapped into here and tried to really break through on the 5-minute and even 1 minute and stuff like that. So it is not going to break out really until it does the SR flip, where it breaks out, and again you need it to now be confirmed as a support level, as a floor, because otherwise you're not going to know, and the market's not going to know, is this now a valid move above? And you constantly see that. So you would wait for, either you buy a long right now and you would want to buy ample time, or you buy on the breakout and the retest. So I hope that makes sense. That is support and resistance. Very easy topic. The way you identify them is very clear and a visual process. You have to look for prices or points at which price will react the same way consistently on a historical level. This level is marked out because I noticed that every single time it's touched, it breaks down. This level is marked out because I notice every single time it touches, it breaks down. Likewise with this, likewise with these. This level over here is a support level, so I mark it out, right? Likewise with this over here until it finally broke out. Likewise over here. And again, this does not apply only to the weekly time frames. We started a lot of these off with a weekly, and then we zoomed in. So the time frame is negligible to the analysis. What the time frame informs you of is basically how long the move should be anticipated to take. As in, if you are trading something on the weekly time frame, or a chart rather, a setup that you see on the chart that is on the weekly time frame, it is irresponsible to expect it to play out within a day, within 2 days, within even a week. A weekly time frame chart takes weeks to play out. A daily time frame chart takes days to play out. An hourly takes hours to play out, and so on and so forth. So time frame does not have any impact on the setup besides how long of a time frame your trade should be taking and how long the contracts that you buy should be taking in terms of expiration. Hope that all makes sense. Have a great night.